How low can volatility go? And how long can gold pretty much go nowhere and stocks just hover at their all-time highs? Well, clearly they can do so for longer than people might expect. But in today's video, I'm going to be talking about some warning signs that I'm seeing in this market and why I think getting complacent right now could be a huge mistake. I've mentioned this in past videos, but a lot of times in these type of environments, the easy thing for people to start doing is just to believe, the market goes up every day and that gold is just dead and never going to move anymore. And if you're someone who trades gold and you feel like you're being gaslit by how choppy this thing is, you're not alone. This is the average true range indicator here, and what you can see is a steady decline over the last few months. What this signals is that the average true range of each daily candle has been declining over time. The average performance or average move in one direction or the other is really low in gold. Compare that to during the chaos that we had earlier this year, where gold was actually moving really moving, to the upside and to the downside. It just had a lot more volatility. What you can see here is that the average true range is a good measurement of the volatility of particular assets. You can see the dollar also low in volatility, even the NASDAQ really losing that massive volatility that we had earlier this year. And that goes for currencies too, which have been trending lower in their volatility as well. Almost everything seems to be calm out there, and that brings me to the topic of the day. The VIX, which is often referred to as the fear index, is essentially a reflection of the options market implied moves going forward for the S&P 500. And I actually took a long position on this, which may sound crazy, but essentially I bet that in the next few months, we should see some kind of a spike in volatility. Let me actually show you the trade in more detail for those interested. So I know not everyone is an options trader here, but just for a high level view, I essentially bought a call spread. I bought a call that is in the money and I sold a call out of the money. Essentially, my concept here is that if the VIX jumps up in price significantly anytime in the next few months, I should be able to make some kind of a profit on this trade. The VIX, or volatility in general, typically moves in waves. We have big spikes and then down moves, up, down, and we've been hovering lower for several months now. Now, I have no idea with certainty if we're going to get some sort of fear event or something to happen in the next few months, but I think the volatility here is so low and volatility is priced for such small moves going forward that the opportunity of a potential spike looks really attractive. So I actually bought some call options on the VIX going out until November, I think it's 17th or whatever it was just on the screen. And I think that's also a little reflective of my perspective on indices, which is they've just been grinding higher in a low volatility environment for several months. And, let me be clear, in the last several months, I've been very bullish on the indices and actually have had a really good year being predominantly on the long side of this sell-off that we saw in April. But I do think now we've had this very long stretch and expectations for the market are very high. The put to call ratio for the S&P 500 continues to look very, very stretched to the downside. What that signals is that there's a huge demand for call options in this market right now. People are pretty bullish, thinking that the stock market's going to keep going higher. The Bitcoin to gold ratio also looks like it may be on the cusp of turning lower here. So we've had the Bitcoin to gold ratio moving higher, which is another risk on environment type sort of thing, right? When you have Bitcoin essentially outperforming the performance of gold. So we've had Bitcoin really, really hot recently and showing some signs, in my opinion, of potentially rolling over. Here's a look at the daily chart of Bitcoin, and what you can see here is that we did come into contact with some new all-time highs, pulled back to support, but were unable to hold any gains there and actually moved lower. So I do want to be clear that I am not necessarily super short on the indices. Although being long the VIX is kind of a proxy short, I also have a lot of long exposure on individual stocks in the S&P 500 and the NASDAQ. So I do have some long exposure that I wanted to sort of hedge out by buying some VIX call options, as well as selling calls against a lot of the stocks that I own. Essentially, I think it is pretty reasonable that we do see some sort of a larger pullback, especially with this week's main event. This Friday, we get the Jackson Hole speech from Jerome Powell, which this is actually going to be his final Jackson Hole speech, as his term is coming to an end next year, and we are likely to hear something out of him during this final meeting. And it will be interesting to see which direction Jerome Powell takes in this speech. The Jackson Hole Symposium, which is an annual event event that the Fed does has historically been a time where Fed officials make their case. They make their stand on a particular issue of the day. In this case, we're talking about when are we going to get rate cuts, how soon, or are we going to continue the fight with inflation, etc. And to me, there's two paths that the Jackson Hole Symposium could go. If we know it is more of a decisive type of event, the question will be, is it going to be more complacent with the current administration's desire to cut interest rates? Or is this going to be, since it's the last chance for Jerome Powell to really make a stand, an opportunity for him to take the role of making the stand that the Fed should remain independent from political parties and administrations trying to bully their way into a particular path? It's going to be interesting because if he does that, if he takes this step towards, we're not ready to fully commit to cutting interest rates, and it throws the September meeting into jeopardy as to whether or not we're going to get a rate cut. Because right now, current expectations are we're going to get a first rate cut during September, and then the rest of the year is really up in the air. Some people think we're going to get another 2 rate cuts, some people think we're just going to get 1 more, and some people think we're going to get none all year long. So the House is really divided on this issue as to whether or not we're going to get interest rate cuts. So is Jerome Powell going to take the stand on Friday and kind of stand up to the current administration, say the Fed should remain independent and we do not see it ready to cut rates? Or is he going to say, as some of his peers have said, some of the other officials like Waller and Bowman have said, it is appropriate now to cut rates? So that is where I think Friday will be a really big market event, because you are going to see him kind of take the stand, and likely, as the Jackson Hole Symposium typically does, it will probably evoke him to make some sort of call one way or the other. Are we cutting rates, or are we going to hold fast? I'm curious what you guys think in the comment section, so definitely drop those comments down below. Taking a look at the economic heat map for just a second, I've talked about this a lot here recently, but I think it's important as we go into this critical event. The overall macro data summary here for the US dollar is very mixed. While US stocks are showing some signs of economic data that could be a threat to them. Let's talk about the dollar here for a second. GDP growth was good for the dollar. The producer price index last week was really hot, which could signal less rate cuts are coming. The PCE, however, also was hot. And then we also had wage growth that was strong. Then US jobless claims last week were good, and ADP numbers were also better than expected. But to contrast that, we had some negative numbers as well. Manufacturing PMIs, definitely bad. Services PMIs, not great. Retail sales numbers, not good. CPI, cooler than expected, that's bearish for the dollar. JOLTS job openings, they were also weaker than expected, and the NFP report was pretty abysmal. So we have a mixed picture for the US dollar. So does the Fed cut interest rates or hold them at that point? Well, considering the Fed has called their current position restrictive several times, even Jerome Powell has been saying this, I think it's likely that the Fed is going to signal 1 rate cut. But my prediction is that I think Jerome Powell's probably going to take the stand, and he's going to do some sort of a hawkish cut. He's going to announce that, yes, we're going to cut rates, but it is likely to be one and done, or he might not say it in those exact words, but I think that's going to be what the market hears, and we'll see how the market reacts to it. Now, personally, I think we should probably cut rates 2 to 3 times this year, as we are sufficiently restrictive and we're seeing some data come in soft. But Jerome Powell has been very adamant about being pretty slow to cut interest rates to try and combat inflation. And despite Trump's kind of attacks on him and threatening his job, and then also not threatening his job and going back and forth on that, it's a scary time, I imagine, to be the Fed official. But also, I think that there is some concern here. But also, I don't think Jerome Powell is really going to take the bullying and change what he's planning to do. I think likely he is going to be a little bit more on the hawkish side, as he has been in recent months, even though some of the other officials, which might be jockeying for the new job that will open up for Jerome Powell's chair next year, they might be a little bit more on the dovish side and maintain that dovish positioning. So what does that mean for stocks? Well, rate cuts are good for stocks, but we are seeing some economic data that looks a little bit lackluster recently. Also, I just wanted to make a quick announcement. We are coming up on this channel to 500,000 subscribers. And to celebrate, I've got something really cool coming out that we're likely going to be announcing tomorrow. Our channel's about to be hitting 500,000 subscribers. And when it does, I've got something really exciting for you guys, especially, here's your hint, if you are a fan of the Edge Finder and do not yet have it, it's not a sale, but it's something really exciting. So stay tuned if you'd like to keep up to date with what's coming out and be the first to get access to this exciting thing we're dropping. make sure to join our Telegram channel. The link is in the description down below. Join our Telegram and stay tuned as we'll be posting announcements about the special event that will be starting tomorrow. Very soon. Again, the link can be found in the description down below. Not a big movement here on the NASDAQ. Again, I think this week the market is mostly gearing up for that Jackson Hole symposium at the end of this week. We'll see if that does cause any volatility. Let's take a look at the US dollar here as we just got done discussing it quite a bit. You can see that 50% reading from the economic heat map in the US has still kind of held a pretty good barometer for the dollar overall. We've seen the dollar moving back and forth without much conviction in one way or the other. For now, I see that likely to be the case for a little bit longer, but it really does depend what comes out of Jackson Hole, because if you get a Fed official, Jerome Powell, if he comes out and he says, you know, hey, we really do not see more than one cut for the rest of this year, if that seems to be, if he says like right now, that's what we're seeing, the dollar could move higher just off of that unwillingness to cut interest rates. But if there is a dovish surprise, obviously it could send the dollar lower. And I don't know exactly what Powell is likely to say, but my best guess, my educated guess, is I think that Powell will remain, willing, probably signal a cut in September, but maybe not much more than that. And just to show you how volatile interest rate projections are right now, look at this. We're now looking at, for the September meeting, a 83% chance that we're going to get a rate cut. Now that's still a very high chance, but just a few weeks ago, it was 99%. And so perhaps the market is thinking, yeah, Powell's going to come out and be a little bit more hawkish. And this number could sink from 83% to possibly down to like 60 or 50 if there's something that is said. Now, I think the likely scenario is that, and this is again my best guess, I think you probably do get a rate cut in September and a signal from Powell, but then I think that you go out to December and we might see this thing jump from, currently we're seeing a probability of 1, 2, 3 rate cuts. So we're seeing, a good solid chance that we're going to get 2, and then a slight chance we're going to get 3. There's a possibility that we rule out the 3rd or even the 2nd if Powell comes in very hawkish. Now, how would gold react if we do see a very hawkish Powell? Well, again, if it sends the dollar higher, then gold likely would move lower here and could possibly be headed down to the bottom end of this range. If you get a signal of a rate cut and a more dovish sounding Powell, that could send gold higher. And so again, based on that, I've been pretty neutral on gold in terms of entries. I like it on the long side if it comes down to this level of support, as I've mentioned in recent videos, but only really interested if it does give me that pullback. And today's video is sponsored by Vantage Markets. If you're looking for an international brokerage and you're a non-US trader, check out Vantage for their low trading fees and the many different assets they offer through their CFD and Forex trading platform. You can trade cryptocurrencies, individual stock CFDs, indices, commodities, and much, much more, all in their one platform. They also offer a copy trading platform, and they're offering a pretty significant welcome bonus to subscribers of my channel that use the link that can be found in the description down below to sign up and create a new account with Vantage. So check them out, do your due diligence, and see if they're right for you. Now back to the video. In terms of top setups for me this week, I've been talking about my interest in going long silver or gold and the euro, and then my bearish looking setup for US oil. Let's check in on each of those. So silver is still looking like it's just choppy, just like gold. I'm waiting for a possible pullback into this area of support around 36.50. Gold, same thing. I'd be interested around that 32.70 area for possible longs or a breakout if we were to see it, but still really far away from an entry on gold at this time. Oil prices continue to sink lower. I think my bearish perspective is correct, but I may miss the opportunity as it's kept moving lower without me. If we do get a sharp push to the upside around that 66 level, I'm looking for possible short setups on oil prices, specifically putting a stop around here, and looking for a bigger move is something I'm interested in. Here's a look at euro dollar, which I'd be interested in if we got a pullback into this area of 1.16 to 1.155, let's call it, and would be willing to add further if we got down into the 114.50 to 114 level. Dollar yen is also getting a really bearish reading. I want to check on that. And I mentioned out of the gate today that my VIX long position, which is, by the way, a debit if you're familiar with options, where essentially I'm paying premium to potentially capture a big upside move if it happens. In a way, it's sort of a similar trade to taking a long position on the Japanese yen because you think some sort of risk-off type environment is going to take place. Likely, if you get a spike in the VIX, there's a good chance the yen is also strengthening at the same time. Not always, and it's not a perfect way that works, but typically, especially against like risk on currencies, if you get a market sell-off, you see yen appreciate, you see the VIX jump, stocks down, etc. And to me, the dollar yen still looks likely to be moving lower. Path of least resistance, at least for now, seems to be that. The dollar Swiss franc is also bearish setup on the edge finder currently, still hugging this level of resistance around 81. And I do want to remind you that if you're a fan of the edge finder but do not yet have a copy, make sure to join our Telegram channel to make sure you're there for the special announcement that is likely to be taking place tomorrow. The link for the Telegram channel can be found in the description or in the first pinned comment of the comment section below. Join us there and stay tuned for a really exciting announcement. I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.